We will gear up for the next session in a very, very short while. Meanwhile, I would like for all of you to know about the numerous side events that are happening. By the way, when I say side events, I would also like to remind you that on the GFF app, we have the GFF GPT feature where you can chat and know about the speakers, the sessions going on, and all of the side events, all the hustle, bustle that's happening around Global Fintech Fest 2025. Apart from that, I am also going to take the opportunity to enlighten you about some of the really amazing side events that are happening. So we do have closed-door discussions. We have pitches that are happening. We have product launches and report launches. But apart from all of that, we also have this KPR Sundowner, which is happening tomorrow at 6 p.m. in the Grand Theatre. Ladies and gentlemen, I would like to also take this opportunity to thank our gracious partners, customer experience partner Adobe, Notepad partner Oddbridge, caffeine partner What Is Platforms, insurance innovation partner Reliance General Insurance, floor plan partner Fiat Pay. Now, I do understand that we have so much to talk about. We want dialogue. That's essentially why we are here. But it is my utmost job to maintain decorum over here. So it is my very, very humble request from all of our audience members to please take the conversations outside. This will help us to begin with the next session more smoothly. Sometimes I really like that despite having so much of voice, people don't really listen to me. All right, I'm going to try this again. Ladies and gentlemen, I would very humbly request all of you to kindly take conversations outside of the ballroom so that we can prepare for our next session. All right, so for all of the people who are here for the next session, I want you all to please be seated. And for the people who wish to have conversations, I request you all to please take these conversations outside the ballroom. Once again, for all of you who are here for the next session, a very interesting topic, Global from Ground Up, Reimagining Fintech for a Multi-Currency, Multi-Regulatory Future. All the people here for this session request you all to please be seated. For the rest of you, I would love for you all to take the conversation outside if you possibly can. Thank you so much for that. All right, then, ladies and gentlemen, let's gear up for the next session without wasting much time. Like I mentioned earlier, it is an extremely important topic of conversation, and we've heard some discussions happen around this already, but this time around, it is going to be a niche focus on something that has been a dream for not just our nation, but the entire world. Global from the ground up, we are going to discuss how we can reimagine fintech for a multi-currency, multi-regulatory future. In order to conduct this session, let me first introduce to all of you the moderator for the session, Mr. Rahul Kothari, Chief Operating Officer, Razorpay. To join him for this discussion, we have amongst our speakers, Mr. Alex Vaughan Schirmeister, Managing Director, Emerging Markets and New Ventures, Xero. Mr. Guhaprasath Rajagopal, Managing Director, JP Morgan. Ms. Sarita Singh, Managing Director, Southeast Asia, India, Greater China, and South Korea, Stripe. I want all of you to show the same level of enthusiasm and welcome our panelists and moderator onto the dais.
Thank you. First of all, thank you all for joining this session. Today we have really a great panel with very varied kind of experience and very in-depth experience to make this session really meaningful and deep. We have Sarita. She heads the Southeast Asia, including China, for Stripe. Before that, she has been part of Meta, also leading the Southeast Asia business. And she has credible experience, in fact, incredible experience on how the cross-border business in some of these emerging economies are growing, what those challenges are facing. We have Guha. He is a managing director at JP Morgan with almost 19 to 20 years of experience in payments, really a veteran. He has seen how payments have grown when it was not considered so glamorous to today when it has become really so glamorous in India and the worldwide. Then we have Alex. Alex is a managing director at Xero. Xero works on the overall accounting, bookkeeping, infrastructure technologies for small businesses. He has been a strong supporter of creating those technologies for the small businesses to make the business far more seamless. So a lot of experience on this panel, focus on globals, focus on India, and focus on Southeast Asia. Thank you so much for joining the panel. Now with this, let's quickly move into the topic of today, which is about the international cross-border business. Let me first start with the overall theme of what is the overall growth of cross-border business, why it's happening. But before I ask the questions, few facts. The cross-border business in India is almost $2 trillion annually. Now, within that, the segments, two segments which has been fastest growing, and unsurprisingly so, is e-commerce and the SaaS business, both contributing to almost $25 billion of overall transaction volume per year. Another fun fact, in fact, everybody knows probably which geography has the highest freelance talent in the world. That's US. But maybe not many know the second biggest, the second country which has the highest density of the freelance talent, which does cross-border business, and that's India. So overall, I think in India and worldwide in general, a lot of growth in the cross-border business. Now, with that, Sarita, the first question to you. With your overall experience of looking at the growth of cross-border business in Southeast Asia, you almost had a front seat where you've seen different drivers which is working in the growth and also some of the challenges which are there and how those have been overcome. Can you shed some perspective on that, some of the interesting things that you have seen?
Sure. Hi, everybody. Look, there's been so much change and so much growth with cross-border business, as you've mentioned. And if we think of just the last 15 years, so 15 years ago, Stripe was born, and so much has changed in that time. So in 2009, just 25% of global GDP was driven out of Asia Pacific. Fast forward to today, and that's 40% and growing quickly. So incredible change in just a very short period of time. And we're seeing the same things on the Stripe platform. Since 2018, we've seen our cross-border volumes increase 40% annually. So the question is, what is driving this growth? What is driving this global GDP increase? And really, what we're seeing is that it's the digitization of economies. So where we traditionally have done or driven GDP with physical goods, it's actually the growth in digital goods that's improving Asia's contribution to global GDP. And if we think about what a practical example of that might be, at the moment, Stripe, or at least this year, we've worked with a number of AI companies out of Asia Pacific, and they have scaled in their first year of operation to more than 60 countries, 60. They are seeing more than 50% of their revenue come from outside of their global markets, their home market. So really, if you are digital first, it means that you are global first. And there are two key components of that are driving it. One is robust financial infrastructure, such as what Stripe provides. So really strong in currencies, local payment methods, cross-border money flows, billing, tax compliance, etc. But the second is also government investment in digital public infrastructure. For example, UPI into Singapore, and there are many other such initiatives across Southeast Asia. So whether you are a small company or a big company, having access to global markets and customers spread all around the world is really being democratized.
That's great, and I think I really like the way you put it. I think historically the growth has been through the physical goods, then digitization, what drove it. And actually, I do believe, and I also see well at Razorpay, how the growth of AI is now really going to supercharge cross-border growth, given just at the scale these companies are growing and how it's kind of each company, no one is actually looking at just a domestic market. From the day one, these companies are global in nature. So I'm definitely, in fact, another fact like e-commerce and SaaS, which have been kind of growing very fast so far, even those have grown almost 3 times in the last 4 years. So tremendous growth there. Coming to you, Guha, again, I want to understand from JP Morgan's perspective, and given you work in payments and also from a bank perspective, work with different kind of merchants, institutional, wholesale, small merchants. From your perspective, how it has been like for last maybe 10 years? I know you have like 20 years of oral insights, but maybe last 10 years, how things have grown and what are drivers? Maybe with a little bit more focus in India.
Sure. Thanks, Rahul, and good afternoon all. So as JP Morgan in India, we look at corporate, FI, and fintech flows. Now, if you look at some statistics, Rahul laid out a few from a payments point of view. Some stats which show the strength of I would say, the cross-border collaboration. Of course, the GDP for this year is looking strong, but on that base, if you look at our exports number, 70 billion, monthly, and quite equally between merchandise and service. FDI extremely strong from the previous year, at 80 billion, 10-15% better than last year. And remittances, which is the other big indicator when we look at flows through FIs and fintechs, at 130 billion, and outward as well picking up at 30 billion. Now these numbers are generally grown over the last 5 to 10 years, and I'm sticking only to the cross-border statistics here, which generally shows, I would say, the collaboration and bonding between the India business and overseas. Now, what do we observe as trends in this segment? Now, for multinationals in India, I think the services and the GCC story is now well documented. That's something which we also expect to double in the next 5 years or so. But what's interesting, apart from the services story, is also the likes of Airbus to Apple to various auto manufacturing, also focusing on the physical manufacturing. Going on to the Indian corporates, I think the more interesting trend there is the outward investments, right? Which also is almost up 60-70% on a year-on-year basis, which is quite different, from the past. That also has an interesting mix of jurisdictions. What was earlier limited to Mauritius and Singapore is now expanding to Netherlands, Luxembourg as well. All of this is cross-border activity, and an interesting addition to that mix is GIFT City now, which not only brings locational advantage, for the Indian corporates, but also, various other tax benefits as well. So overall, we do see, from our vantage position, huge activity, in terms of FDIs, investments here, and both directions of MNCs in and headquarters, outside as well.
Great, and I think that's another interesting perspective. I have a quick follow-up question here. When we talk about the investments, typically you see most of these, the growth is you're seeing both in the B2B and also the Indian individual investors kind of moving money outside for investments, or how are you seeing it?
Correct. I mean, the big number for the outward is like 30 billion per year. There is Indians, sending money outside, and a lot of it, some of it is simple P2P, and a lot of it is investments as well. So yes, we do see outward investments also. That is only on the P2P side. But if you look at the corporate side, as I mentioned, it's a much higher number, at almost 40 billion, dollars just for the financial year.
Great, thank you. Thanks, Guha. Now, quickly moving from payments to a slightly different territory in terms of the overall software, accounting software, bookkeeping software. On that, Alex, I would like to understand, how typically, most people will think of this software or technologies much more local in nature than global in nature. From your perspective, how are you seeing the adoption of some of these technologies globally, especially like the enabling technologies that you are working on, and what is driving the growth of again, the global in that? Because more and more, at least to a layman, it looks like it's more of a local game that is played there.
Yeah, thank you for the question, and good afternoon, everyone. I'd start with the fact that small businesses everywhere in the world have very, very similar needs. And ultimately, when you think about the fundamental value proposition for the small business and what they need to run their business, it's quite similar. And so there's kind of a universally acceptable product and product market fit that you're able to build. Now, in certain industries, certainly in payments, in accounting, in bookkeeping, in tax and compliance, you then very quickly start running into extremely complex, localized or nuanced differentiations that you need to meet from a regulatory point of view. And that's probably why you don't see a global player in accounting and bookkeeping software and in tax software. Many players are in several countries, but as far as going a global player, that's very, very, very complex to do. And so typically two things happen. One is, when you look at what Xero does, we, from the very early days, we opened up our APIs to allow third parties, or to allow local developers to use those APIs to plug into the fundamental Xero software and offer additional services. And so what that does is, it allows us to offer globally a universally acceptable, very good bookkeeping and accounting product, but then let those local players build on tax or compliance or payroll layers on top of that. And then we work with other global partners, such as Stripe, to power kind of payments in that platform. So that's one way, obviously, of doing the kind of global operations. And then the other one is, and there's plenty of room for that, is you will continue seeing many, many, many local players that are experts at satisfying the needs of the users in a particular market. And so I think definitely in the software world, you will always see a combination between a few kind of global players who've kind of managed to find this hybrid between their presence and third parties, as well as local players in every market.
Oh, that's very interesting, and I think one good point to make, in fact, for the growth of this entire cross-border payments and business, I think both the enabling softwares like yours and the payments has to go hand in hand for eventually these things to scale. But on that, I have another follow-on question, and typically for this growth, how do you look at, typically in different first question is, most of the customers that you have, they are typically one geography, one country customers, or they are like multiple geography, multiple country customers? And the second question I have, typically, how do you scale these businesses? It is via you mentioned partners which integrate with them, which integrate with you, but also GTMs are just directly managed by you or by partners. How this entire thing works?
So there are different things happening. One thing we observed that's really happening everywhere around the world, and some countries are doing it at an accelerated pace versus others, but most countries are digitalizing very, very quickly. And again, the fundamental small business is being asked to or forced to digitalize very, very quickly. And so one of the things we watch whenever we operate anywhere in the world is which countries have regulatory environments or governments about to dictate regulatory environments where we know that there will be just a natural momentum of digitalization. And whether you look at Southeast Asia, I'll take e-invoicing in Malaysia as an example, whether you look at Latin America, whether you look at Europe, Eastern Europe, there's some example of that digitalization everywhere. The second thing we then look at in terms of the digital landscape and the opportunity for that digitalization is the biggest competitor, someone like Xero today, is still pen and paper or spreadsheets. Right? Many of these small businesses are still running their accounts with pen and paper and spreadsheets. And so the opportunity to digitalize is very, very important. But it's important to kind of figure out how you go to market. And that then comes to your go-to-market question. Different companies, and depending on what sector you're in, will find different approaches. In our case, what we have found is that the accounting and bookkeeping body in every single one of these countries is absolutely fundamental. In certain markets, you're mandated to work with an accountant bookkeeper in order to do anything anyway. And so that's very easy. In other markets, certain businesses of a certain size will typically rely on an accountant bookkeeper. And so we've designed the software in a way that it works very well for the small business in cooperation or in collaboration with an accountant and bookkeeper. And that allows us kind of a two-pronged go-to-market. We can either go to market directly to the end business, or we can go to market via partnerships with accounting and bookkeeping bodies.
Great. So thanks. So in summary, saying localization is important, working with local partners is important, and second, having a conducive regulatory environment. That's where primarily I think it's important. Now this gives a good segue a bit to kind of move into how this entire growth innovation is intertwined with the regulations. And while most of us think of regulations as something which can be against innovation, I think at least what I see at least in last few years with my experience, it's becoming more of a tailwind than a headwind, right? Like with some of the things that's happening on the PACB side, some of the enabling things, I think those are very interesting. So I would be like quickly getting into the slightly regulatory aspect of different things. So again, getting back to you, Sarita, the question to you is, given you are like one of the, Stripe is one of the innovators in some of the new things that happens on the technology side, and when any new innovation is just started, typically regulations take a lot of time to catch up to the technology. And till that time, that innovation or technology has to work in a gray area. And in fact, I have seen situations when some of these innovative technologies scale, and when regulator notices it, sometimes probably it doesn't go forward, and that's a lot of energy, resources, people, talent wasted. So I believe there has to be a way for regulator to engage with the emerging technologies slightly early. In your experience, have you seen that? Have you seen any model across different countries which has worked better? Some of the key insights that you have on those?
Yeah, it's a great question. I think the grey areas really are providing a lot of headwinds, as you mentioned. And when we think about what that looks like, it can result in uncertainty for innovators, it can result in risk for consumers, and potentially blind spots for regulators as well. And so if we think about it, it's a bit of a paradox, but it can actually slow innovation whilst also increasing risk. One of the models that we have been closely monitoring and we think actually is working really well is the sandbox system that is being rolled out here in India for domestic payments, cross-border payments, as well as interoperability between jurisdictions. And what these sandboxes are able to provide is a control environment for innovators to develop new products and approaches. What it also does is allows the regulators to see the real-world applicability of these innovations and subsequently develop regulatory frameworks that are based on the realities rather than theoretical aspects. And then in the process of that, there are just better, less risky outcomes for consumers. So I think there's an opportunity for all of these ecosystem players to come together through the sandbox process, where everyone can benefit from this. The alternative is that innovation goes underground, risk for consumers increases, and regulators are constantly playing catch-up. So I think the process that we see here is actually really about collaboration and all the ecosystem players coming together to make it better.
No, that makes perfect sense. And in fact, I have seen a lot of activity in the regulatory sandbox environment, like in the Gift City or even in the PACB. Again, a follow-up question to you only. Like, how do you see India versus some of the other countries that you kind of work at? From a sandbox perspective, do you think regulators here being more proactive, some other countries being more proactive? Any views that you have?
Yeah, I think one thing that I see here is the regulator is very forward-looking. Not necessarily the case for all of the countries in this region, but there are some, and RBI is definitely one of them, that is incredibly forward-looking, has a healthy risk appetite, fosters innovation, includes the ecosystem. It's a great environment to work in if you are an innovative company. Enough guardrails to keep all the players safe and heading in the same direction, but enough of an appetite to try new things and move the ecosystem forward.
Yeah, yes, and I think that's the model to go. So thanks for the insight. Coming to you, Goha, again, you have seen also the many regulations evolving, and as recent as I think recent the new guidelines again on the payment OPGSP, and then also formation of the payments board. So just want to understand like what is your view on some of these regulations, including the FEMA guidelines or this come. Where do you think it's headed, and what are some of the good things you see about it, and probably if a view on some of the things that you think could have been better?
Sure. If you go back to the friction in the cross-border payments generally, right? We're talking about multi-geography, multi-regulatory, and from a fintech point of view, the usual ones are about the different standards in KYC, AML screening, right? So, and it's not consistent across. And then, of course, your usual challenge of access to payment systems in your source country, in the destination country, finality of settlement, turnaround times, and when you do it across so many geographies, it's never easy, right? So that's the general problem statement, which has been steadily improving over time. Now, when the initial e-commerce boom, I would say the 2000s, for India, when it picked up, not just domestically, when Indian importers and exporters were getting, active internationally, that's when the OPGSP, era started, as I say, from 2010. And it solved a few problems of that time, which was around expensive, mode of collections. Then there were only fewer options to do. So this made it relatively economic to collect money in one jurisdiction and transfer it to the other by cheaper means like ACH in those markets, and not needing to open entities and accounts in various geographies, and also brought some transparency. And till then, as you mentioned, it was unregulated in market practice, so it got in, you could say, some a flavor of regulation. Now that was good for the next decade or so, but along with COVID, but the next wave, I think, of the e-commerce boom came in, and when the Indian importers and exporters have become much bigger, then there was a need for a different framework, much more enabling framework, which is where the whole concept of PA, which had come in 2020, expanded to what we call as PACB, or Payment Aggregator Cross-Border, in 2023. And that brought about notable changes, I would say, and mainly enabling features, primarily around net worth, criteria, getting the players formally regulated, not just by the banking regulator, but also by FIU, right? And that gives a lot of trust to the system, right? And so it's no longer about just any operator doing this intermediaries work, but has to be a more serious player if you have to operate in India. And then the need for, you could say, safer accounts with escrow structure, dedicated accounts for imports and exports. All that meant that, as a buyer or a seller, you have a lot of confidence, in the money reaching, the right party, along with the services. Now, and that, as we speak, has also got refreshed, 3 weeks back. I would say liberalizing, a little more, in the journey. So overall, to Sarita's point, yes, you could say that generally, regulators are not there on day one when the flow starts. But in India, I think there's been a more active engagement with the industry, to sort of formalize, the structure. And remember, also, we are an exchange control country, right? So with that context, I think the liberalization has been, quite consistent over time. Now, to the other point, this is one example of, I would say, reg and tech, working together along with, the banks as well. To the point on the regulatory sandbox, I think very interesting point. India was relatively late to the journey from 2019, but in 2022, we did the cross-border, cohort with, I think, 4 fintechs sort of clearing it, to partner with other banks. But the next step is more interesting. We also have an interoperable regulatory sandbox, right? Because in India, we have multiple financial regulators, not just RBI. So you have in insurance, you have in capital markets, etc. And all of them also together have a framework as a fintech if you need to touch more than one financial domain. And the third step to that was the international collaboration, she referred to. I think we have excellent model with Singapore and UAE. What was done by states like only Andhra and Maharashtra earlier, it now runs more formally, with the ministry and with IFSCA as well. So these are, I think, good examples from India where, the government, regulator have taken, you could say, the extra mile to work with the fintechs right from the onset, so that it's a safe and also an inclusive growth as we have it.
Yeah, great. And in fact, you made 3 points which I can't kind of, agree more. One is, I think you brought a very interesting point on trust through regulations. In general, like we talk about regulations, okay, how they can be hindrance to the innovation or how they can make it slow. But I think that's what brings the trust and therefore the technology scale. And personally, I think like in India, payments have been like more frictional than most of other geographies because of second factor authentication. But had it not been there, I don't think as a country we would have scaled in payments the way we have scaled right now. Had there been initial frauds, etc., people would not have even adopted it. So I think that's we keep kind of somewhere forgetting also why in some ways regulation is a very, very strong enabler for or scaling up of innovation and technology as well. I think second point I can't again saying I agree a lot with you is in terms of the sandbox environments which now earlier mostly used to be within for India specific innovations, but now with the cross-border thing coming into play, a sandbox environment for technologies or payments across different countries, I think that plays a very strong point. And there was one more point I think I was talking about here. You said about the gray areas, right, where the PSAB kind of brought a lot of formalization of what was earlier in OPGSP. And in fact, I somewhere also believe, and what we spoke earlier, like, gray area also which kind of does not enable innovations a lot because companies are not able to commit to technologies, resources, people to scale a lot. So you made a lot of interesting points. So those are great. Now coming to you, Alex, I have. How do you look at regulations from your perspective, right? Like in India, say the GST rollout happened, the GST rates changes, slab structures change. Similar changes happen in different other geographies or different other kind of regulations that change. Now, how do you keep abreast of it, and how do you kind of really make sure that your product and also the merchants or customers using all those products are always on top of the latest regulation changes happening? And why I'm asking is because, again, typically local players moves very fast with those changes. For global companies, first of all, knowing what are some of the key changes going to come itself is slightly difficult. Like they only get to know once the changes happened. And second, then how do you kind of make those things move very, very fast?
Yeah, it's a very good question. I mean, the first thing I would say, and also just building on Sarita and Guha's points earlier is, innovators don't wait for the regulators, right? If the regulator is too slow to move, innovators will go somewhere else. And you see countries playing that out against each other all the time. And so I think it's a real wake-up call to regulators that they need to speed up, they need to accelerate, and they need to keep pace with innovation, because innovation will happen. It may just happen somewhere else. Now, the good news, and it goes part towards answering the question, is the regulators are increasingly talking to each other and benchmarking with each other. Whereas several years ago, I didn't see any dialogue amongst them. Nowadays, I'll give you an example. I was recently involved in a task force with the British government around digitalization. Well, most of the things the British government wanted to know from me was, what are you doing in Malaysia? What are you doing in Singapore? What's going on in Australia? What's going on in New Zealand? When you look at the tax or the revenue services or HMRC, etc., they're all talking to each other. They know what's going on. And that's then one of the things we lean on to know what regulation is coming. When you know that they are speaking to each other, and when you know that typically there are certain countries that are probably ahead when it comes to regulation around digital identity or digitalization, it is relatively safe to assume that that is the direction of travel for other markets, right? Singapore's been mentioned once or twice already. I think most countries are looking at Singapore as an example to follow. Will it be exactly the same? No, perhaps not, but it will be close enough. When you look at the certain digital efforts, such as the global effort around e-invoicing, it tends to fall within the same standard, and everybody's using, or almost everybody's using, the PEPAL standard. And so in as much as an innovator, if you're building out so that you can deploy rapidly on that standard, you're probably going to be very closely behind once the regulatory changes happen. Now that said, Rahul, you're totally right. We cannot be everywhere. There is absolutely an advantage to local players who have an ear to their customer, an ear to the market, an ear to the regulator, and are able to kind of pick up on those innovations to build relevant digital customer-friendly products for the consumers in their markets. And so by all means, I do think there's lots of room for local digital innovation in every single one of the markets, even if some of the global players are getting better at picking it up quickly.
Yeah. No, interesting. And since you touched upon like a regulation in one country kind of impacting regulations on some other countries as well, very interestingly, I was part of one of the discussions recently where actually regulators across different countries were talking about how they can standardize some of the protocols of payment transfers, etc. And sometimes I think like if some of those standards are uniform across the globe, the global payments can be so much more seamless and sometimes, and in fact, so much more almost instant. Like there's no reason why cross-border payments take so much time to happen versus say the domestic payments which are so much more instantaneous. Great. Now with this, moving a bit to overall technology side of the overall of the overall cross-border payments and businesses. I have one question, maybe next to you, Alex, again. And again, tie backs a bit to the earlier one, like while there's so many different changes in regulation and Xero probably keeps on top of it, knowing like what's happening is one country kind of changing another country. But how do you think you are leveraging technology and maybe AI? Like do you think there is going to be a time where you can have, say, in some sense, quote unquote, a self-healing accounting platform which sees what regulatory changes are happening and kind of very quickly understand what changes needs in a platform, and probably in very fast you can kind of get those done. Essentially, I'm asking, do you think technology can make it far more easier for you or the companies like yourself to be completely abreast with changes in regulation and therefore around governance around those and make the GTMs very, very fast?
Yes and no. I think in my view, the arrival of AI is going to be absolutely massive. Whatever you think right now about AI, whatever it is, it's going to be 10 times bigger. But I do think it'll be 10 times bigger from a technological point of view and may get there in the long term. I think the customer in the short term isn't ready for it. So this is one where I think the technology advance of AI and its arrival in different applications is going to be way faster than what customer habits and go-to-market habits are going to be. And it'll be a kind of a disjointed. Could you think of an AI engine today doing your kind of account preparation and your bookkeeping and your compliance? Absolutely, and it will get there. And it'll probably be able to navigate those regulatory changes much quicker. But again, I said earlier, the biggest competitor, certainly to Xero today, is still pen and paper and spreadsheets. Someone who's using pen and paper is probably still on the early journey of digitalization and is unlikely to leapfrog to AI immediately.
No, sure. And whenever we talk about AI to kind of be abreast of regulation, the things that always come to my mind is what about the governance around it? But that's probably a question for some other day. But that's one of the things probably difficult to figure out. Now with this again, Sarita, question to you, like Stripe, of course, like having the scale in so many different countries. How do you balance, again, from a tech perspective, as a global company, how do you make sure you move very fast locally? Some perspective on that would be helpful.
So Stripe is global by design. We architect our products and we deploy across multiple markets with minimal customizations. And that's the way that we're able to keep up the product velocity. This is balanced on the other side of the equation with a few different things. The first is key partnerships. So our partners give us the local knowledge, the expertise, the regulatory compliance, the licenses, etc., that allow us to scale very quickly across multiple global markets. We also have products that are payments agnostic, which ensure domestic compliance, for example, Stripe Tax or our Atlas product for company creation and registration. And then we have a number of internal teams that have both functional and market expertise to ensure that adherence. So, on one hand, we function like an out-and-out technology company where we can move at great pace and scale, but we are incredibly mindful of the changes and regulatory requirements in markets, and we build our products and we build our teams and our ecosystem partnerships to make sure that we're able to balance both.
Great, thanks. And a quick follow-up question, like how do you think about applicability of AI into these scenarios?
Of course, it's a topic no one is talking about, right? We think about it in different ways. So if I could just do a bit of a plug, Stripe today powers 78% of the Forbes top 50 AI companies, right? So helping companies go global very quickly so they can monetize and grow is what we're doing for our users. Internally, we're adopting AI in many different ways, but ultimately to improve the experience of our users in our products. For example, optimized checkout suite. So being able to surface the right payment methods at the right time to the right users based on a number of different inputs, including their location or the devices that they're using. Similarly, the way that we track and prevent fraud using AI and our AI foundational model, which has been trained on the billions of transactions that happen every year on the Stripe platform. And last year, Stripe Radar blocked more than $400 million worth of fraudulent transactions on our platform. So they're just practical ways that we build this into our product. But the most exciting thing that actually was only announced last week was that we are embedding Stripe financial tools into AI agentic workflows, so that we are effectively powering AI agents to be able to do the transactions themselves on behalf of humans. So we think of it really in different ways, but to your point, Alex, the technology is outpacing where I think the consumer is at the moment, but we very much look forward to that changing.
Yeah, agentic payments, awesome. Yeah. So, Goa, now something on a similar theme. Like, how do you see technology or AI for a global bank like JP Morgan? How are you thinking of it as really kind of helping in the scale up of, say, the cross-border payments specifically and dealing the complexities of it?
Sure. Now, JP Morgan is as much, I would say, a tech company as it is the largest financial service company. Right? We have a global outlay of over $17-18 billion just around between build and run the bank. But if you look at an India context and fintech itself, right? So all the cross-border themes we spoke about, be it PACB, imports or exports or inward-outward, your remittance flows or any other P2P remittances, all of them still have an element of due diligence required, right? None of this is meant to be straight through, but the onus is more on banks and the players to ensure that the friction is as less as possible for the end consumer. So, which is where technology is extremely important. So, for all the flows that we discuss here, none of which is possible if we were to do each of them manually as a checkpoint. We have different platforms, regulatory to check, different tax-related platforms as well to report and cross-verify, and all of them, thankfully, do have an element of API. If nothing, at least an upload, download, bulk capability. So the bank does invest a fair bit to ensure that as consumers of the fintechs, the experience is as close as possible to domestic. So AI is an inherent part of it. For us, very different use cases, starting from the machine learning days, things about sanction screening and various checkpoints to do. So those, I would say, would be a couple of examples just in India on how we are using technology to ensure the payments are as quick and as efficient as possible.
Awesome, amazing. And with all the inputs that you given, like, I can think of using AI at least in the 3 or 4 buckets we're talking about, either to improve the customer experience far better, either to kind of make our workflows more and more automated, or to kind of improve operational metrics like fraud or make faster GTM. So great. Like, I think the applicability of AI almost every in the business, probably no part of the payments or cross-border payments is going to be left untouched of it. I know we have only a minute here, but still I will ask this. Maybe I need just a couple of short statements on this. If I ask you to make a bold prediction for next 5 years about the cross-border payments, what would it be, Alex?
My biggest one is they'll be gone, as in they will happen, but you may not even notice they're happening because they're so seamless and simple that they just happen in the background automatically.
Yeah, awesome.
To me, we could see some formation of regional blocks, where you could cooperate much more closer in terms of your cross-border, money movement.
Wow, awesome.
That the new cross-border ecosystem, in addition to money and people, will also include AI agents.
Wow, awesome. So invisible payments, regional blocks, and AI agents. So that's the prediction for next 5 years. So yeah, we're almost end of time. Can we take some questions still? Yeah. Any questions to the panelists?
Can we please pass a mic to this gentleman over here?
How are we looking at stable coins amidst all these things for cross-border payments?
As a guideline, I think the panelists can't talk about the stable coins or cryptocurrencies or Bitcoin kind of stuff.
Do we have any other question from the audience? Please put your hand up. We have a gentleman right there. Let's pass the mic to him, please.
So my question to the panelist is, the central point for the cross-border to happen is the Nostro accounts. So over the last 10 years, how have the banks changed their policies over offering Nostro accounts to the remittances companies?
I mean, you can't give a generic answer, but depending on the jurisdiction, banks are either allowed, or a lot of times it goes through correspondent banking as well. So the interesting fact is, while a lot has changed in the front end, the rails behind it, continues a lot around correspondent banking, and SWIFT, as a messaging medium. So that part of the Nostro has not changed very much, but wherever it's permitted, to have fintech players or companies, have accounts or non-resident accounts, right? So those have, started as well. So if you look at more common flow, the remittances into India happens entirely through Nostro accounts of all the money exchanges around the world, right? So that's an old example, but still in vogue, right? That's the easiest or the most efficient model for that. So to me, it is, for good reason, also not changed a lot because that is efficient in many cases. But where it doesn't work, the correspondent banking, always is, the other stable solution for that.
Thank you.
Do we have any other question from the audience? All right then. Ladies and gentlemen, can we have a huge round of applause for our panelists and our moderator for ensuring that most of our questions are covered while the session is going on. I would want our panelists to please come forward for a photo op.